Apple is reporting its Q4 for 2025 this week. Let's take a look at the stock on investing.com and see if maybe it's worth a buy going into earnings, or maybe you should wait. My name is Nate. This is not financial advice. I don't know your plan or where you're...
Here we are on Apple's page on investing.com. You know what Apple does, chances are you have one of their phones in your pocket. I have a Samsung myself, but if you have an Apple phone, or leave in the comments, let me know what kind of phone you have, whether it's Apple or Samsung or something else. But let's take a look at Apple stock. They're reporting this week as for Q4 of 2025, and let's take a look, see where it's at. Its current price sits at $248.04 US. Friday of the week before its last date, it stayed pretty much flat. It was down 0.12%. Its 52-week price range is 169 to 288. Now, looking at the 248, it is down off of that. It is down off of that 52-week high. So it's right in that midpoint. It's kind of in a bit of a no man's space at the moment. It needs some announcement to give it a bit of a boost, but it's down off that 52-week high. It's also, you could also look at it as it's up off the 52-week low, and so it's right in that middle area. But I do know it's had 8 weeks of losses, 8 consecutive weeks of losses as a stock goes. Its average fair value is 226, so it has a downside potential of 8.7%. That doesn't mean it's going to go down 8%. That's not a certainty. That's just its average. Its fair value. Uncertainty around Apple is low. It's a fairly steady and stable company. If you've bought it and held it for the long term, you've done very, very well. The spread is 177 to 250 flat, and some change. There are 41 analysts that have given it an average price target at 287, and so that is where we're sitting at. That is up from where we are, so it's rebounding back. That average price target rebounding back to its 52-week high. Just a bit shy of that is what the 41 analysts are saying. Let's talk about bulls and bears and signifiers. So has a perfect, and this word always does me in, Piotrowski has a perfect Piotrowski score of 9, which is a significant bear signal. I went over this in other videos, so I won't take a bunch of time going over this now. I may do a video solely going over this, so that when you watch the stock reviews, you know what that means when that's showing. But if you want, you can pause the video here and take a read of this, okay? But it's got a perfect score of 9, which, long story short, that's a good thing, okay? Has raised its dividends 14 consecutive years. We saw with Microsoft, if you watched that the other day going into its earnings, it has raised its dividends 20 consecutive years. So pretty good 14 years. RSI suggests the stock is in oversold territory. So what's interesting is the fair value, and this is where you've got to look at all aspects of things when looking at individual stocks. Do your homework, as Jim Cramer would say. The fair value is showing a potential downside of 8.7%, but the RSI is showing it's oversold for what this company is. It's trading at a high PE, or price to earnings ratio, relative again to near-term earnings growth. So relative to near-term earnings growth. So this is where you may want to look at more than just the 52-week spread and price range. It's high PE, relative to the near term, not necessarily the long term. Let's look at the chart, and we're going to go long term and work our way back. Sometimes we start short term and go forward. Long term, working our way back 10 years, it has done 1,080%. That is massive for 10 years. That's an average, 10 years, 1,000%, 100% a year. That's massive. Now, it hasn't done that every year. That's just what it's done over the 10 years. 1,080% over the past 5 years has been 93%. So you can see past 5 years significantly lower. That 10 year, the biggest gain was in the first 5 years. You can see that jump right in the middle of the chart there. 5 years. The past 1 year is 8%. It's done about the same as Microsoft has. As we looked at that stock just yesterday, it's done about the same as Microsoft has for the past year. Apple has not done much with AI. The only good thing about their AI story is their capex, or their capital expenditure. What they've spent on AI is very low because they haven't done much of anything with it. They haven't partaken in the AI rally or anything like that took place in 2025. The thing is, if they announce something, it could be massive. The past 3 months, as I mentioned, past 8 weeks in a row have been negative. Past 3 months are down 7.6%. The past month, they are down 9%. And the past week, up just slightly. As of this recording, it's not considering the beginning of the prior week, okay? And so, it's not considering the beginning of the prior week. So actually last week it was down. It's not taking the full week into consideration. But we can see here short term it's down. It's come off those highs, and this is not financial advice, but the two stocks that have done reviews on Microsoft and Apple going into earnings, if you were to purchase any of the major ones doing their earnings reports of Meta, Tesla, Microsoft, Apple, I would lean towards Microsoft and Apple. Again, I don't know your plans, I don't know what funding you have available, I don't know where your finances are at, so this is not my advice